So just imagine the scenario. You wake up tomorrow, grab your coffee, check your bank account, and you see nothing in there. Not because you spent it, but because CRA took your hard earned money. This happens a lot more than you think, but it does not happen randomly or without any warning signs. So let me walk you through exactly when CRA can freeze your bank account, how the process actually works from start to finish, and what you can do right now if you are worried. Hi, I'm Armagan. I'm a CPA in Canada who loves to talk about money, investments, and taxes. If you are interested in any of these topics, why not subscribe to the channel? First, let's clear up some common misconceptions around this process. CRA does not freeze your account because you made a small mistake on your tax return. They also do not freeze your account because you owe a few $100s. That is not how this works. CRA freezes accounts in specific situations. We are talking about significant tax debt, usually thousands of dollars, that has gone unpaid for months or even years. We are talking about repeated failures to respond to CRA notices and phone calls. We are talking about suspected fraud or serious non-compliance. And for business owners, we are talking about failing to remit payroll taxes. This last one is especially serious because that money was never yours to begin with. You collected it from your employees on behalf of the government. The important thing to understand is that a frozen account is an escalation, not a first step. CRA wants their money. A frozen account does not generate payments. They would much rather want you to set up a payment plan and actually pay them back over time. Freezing your account is what happens when everything else has failed for CRA. So let me walk you through the timeline that typically leads to a freeze. Understanding this process is crucial because it shows you exactly where the warning signs appear. So stage 1 is the assessment. CRA determines you owe money and sends you a notice of assessment or reassessment. This is your first official notice that there is a balance owing. Stage 2 is initial contact. You start getting letters, maybe phone calls. CRA is asking you to pay the balance or set up a payment arrangement at your end. At this point, they are being relatively friendly about it. Stage 3 is collections. If you ignore stage 2, your file gets transferred to the collections department. The contact becomes more aggressive. The language in the letter gets stronger. They are no longer asking you nicely. So stage 4 is then legal warnings. You will receive a letter explicitly stating that CRA may take legal action to collect the debt. This is your last clear warning before things get serious. And stage 5 is enforcement. This is where requirements to pay come into picture. And this is what most people do not understand. A requirement to pay is a legal document that CRA sends directly to your bank account or your employer. It is not a request. It is not a suggestion. Your bank is legally required to comply. They will freeze your account or redirect your funds directly to CRA. No court order is needed. No advance notice to you is required. So let that sink in for a moment. When CRA issues a requirement to pay, your bank works for CRA at that time, not for you. They have no choice in this matter. I want to give you some important context about what is happening right now as we head into 2026. CRA collections activity has ramped up significantly since 2023. During the pandemic, enforcement was largely paused. People got CERB, CEWS, various emergency benefits. CRA was focused on getting money out the door, not collecting it. That grace period is over. CRA is now actively pursuing outstanding debts. They have billions of dollars in uncollected debts to recover. They have hired more collection officers. They have invested in better systems for tracking down taxpayers who owe money. If you have unfiled returns or unpaid balances from the past few years, this is the year to deal with it. Not because I'm trying to scare you, but because taking action now gives you options. Scrambling after the freeze is obviously not going to be an ideal situation to be in. Alright, let's talk about what you can do right now to protect yourself. The right approach depends on where you are in this whole process. If you are worried but are currently up to date on your tax filings, the first thing you should do is just log on to your CRA My account, look for any balances owing, check for any notices or letters that you may have missed. If there is a balance, call CRA proactively and set up a payment arrangement before they come to you. Being proactive completely changes the dynamic of this relationship. If you have unfiled tax returns, file them. Even if you cannot pay what you owe, file the tax returns. Filing and owing money is infinitely better than not filing and even then owing money. CRA treats non-filers much more aggressively. You can file your returns and immediately propose a payment plan for the balance. If you are already in the collections process, do not ignore it. That is the worst thing you can do. Call CRA directly or get a CPA involved to help you. Payment arrangements are almost always possible. CRA would rather get paid over 12 to 24 months than chase you around for years. If you have received a legal warning letter, take it seriously. This is your last window before enforcement action happens. This is when you want to get a professional help. A CPA or tax lawyer can sometimes negotiate on your behalf and buy you additional time to sort things out. And if your account is already frozen, you need to act immediately. Contact CRA to understand exactly what is owed and why. Propose a payment arrangement. In some cases, you can apply for taxpayer relief as well. If there were extraordinary circumstances like a medical emergency or natural disaster, the freeze can be lifted, but it requires you to engage with CRA directly. So what can CRA not touch? I want to give you a small bit of relief here. There are some limits to CRA's powers. Your RRSPs are generally protected from creditors, including CRA, as long as the money remains inside the registered plan. There are also some provincial exemptions that protect certain assets depending on where you live. CRA also cannot leave you completely destitute. They are required to leave you enough money to meet basic living expenses for you and your dependents. But I want to be honest with you, these protections are limited, and if you are relying solely on them as your primary strategy, you are already in deep trouble. The real protection is staying compliant and communicating with CRA before things ever escalate to enforcement. So can CRA freeze your bank account? Yes. Their powers are significant and they do not need a court order to do it. But it is not random and it is not instant. There is a process. There are warnings and there are actions you can take at every single stage. The people who get hurt are the ones who avoid, ignore, and hope that this all goes away. It does not go away. The debt grows, the letters keep coming, and eventually enforcement happens. If this was helpful, consider subscribing. I'm building a full library of Canadian tax and personal finance content, practical information that you can actually use, just like the 2 videos on the screen. Check them out, and I will see you in the next one.